Can we trust the RBA on interest rates? Can we trust the RBA when it says the jobs lost due to the coronavirus will be back by Christmas? And is it too late to get on the Bitcoin bandwagon? I'm Peter Switzer.
He's sorry.
And he mucked it up, but we continue and we're mad about money. I won't talk about you screwing up the intro, Paul.
Well, we haven't done that for a while, Peter. We've been in COVID lockdown, and we're in lockdown, right? So here we are.
We can't take this no lockdown experiences. Okay, let's go first one. The RBA, is it right or wrong on interest rates, or are they just telling us a lie?
I think they're digging their head in the sand a little bit, Pete, because I think interest rates will go up next year. The market is telling us that. Pretty concerned about what's going on in New Zealand and just some of the inflationary pressures, Peter. And I'm just surprised by what the RBA is saying because certainly what I'm seeing, they're saying there's no wages inflation. What I'm seeing, Peter, there's huge demand in certain sectors for the right people where salaries are almost doubling in some places.
Yeah.
Now, that's not across the board, but we just can see that in certain sectors. Plus, we know that there's a lot of supply bottlenecks, and you can just see that go around to the supermarket
Try
shelves.
and buy a new car.
Try and buy a new car, and you can see what's happening. So I found it pretty hard to believe we're not going to import some of the inflation that's going on overseas locally. And if wages go up, then that could be what the RBA is looking for. Yeah. 2024, I think is. I think they're smoking something up there in 60 Martin Place.
Well, I want some of it.
Oh, yeah.
But the interesting point is this. Even if the Reserve Bank keeps its head in the sand to 2024, the bottom line is a lot of the cheap money that the banks were getting because of the coronavirus from APRA and from the RBA, it's all dried up. So banks are now borrowing at a dearer rate. So home loan interest rates are going to go up before the cash rate if the RBA is stubborn. True?
Yeah, absolutely. I think that we've seen the bottom in the fixed rates. We've said that before, but bond rates have moved up quite sharply in Australia this week. That will be reflected in the fixed rates and the mortgages. So look, have a look at that closely. But I don't think we're going to see interest rates aren't going any lower, Pete. That's I think is the bottom line. And I think it's a rate rise is not, people are going to start talking about this seriously next year.
Yeah, because Bill Evans from Westpac, he thinks we're going to grow at 7%. If we're growing at 7%, somewhere in 2022, banks are going to start raising interest rates, and probably 2023, it become really serious. Let's go to the next big issue about the RBA. They said all the jobs lost because of the Delta variant of the coronavirus will be back by Christmas. My view is numerically they're probably right, but there've been a lot of jobs that won't be coming back.
Yeah, I think you're right on that one, Pete. I think numerically we're going to get it'll show basically it's all back, but
boom will happen.
There are parts of the economy that just cannot get the labour. Yeah, we know that, for example, in parts of rural Australia, you just cannot get the right people. There are parts in the tech world you cannot get people.
WA is still closed.
WA is still closed to the miners, but there are other industries where there's it's going to be tough. So I think numerically we're right, Peter. There's also a lot of people I think that have, I won't say discouraged, but have gone out of the labour force simply because they've got comfortable being at home, right?
Exactly. There's a lot of retirees that have gone early. You've got people who just don't want to work anymore because the coronavirus has just created incentives. But also all those CBD businesses, Paul, that were dependent on office workers. Until office workers get back in their old numbers, and they never will, there's going to be less demand for workers in cafes and CBDs and retail outlets. All these sorts of jobs will not come back anytime soon. So the RBA is kind of playing around the edges of the truth on that one. Well, final one, Paul, the Bitcoin. I know recently you've been very cynical about Bitcoin, but you've become a little bit
of a believer in Bitcoin, Peter. I haven't dabbled as yet, but I have been watching the price. It keeps going up. The last little spurt up is because of the launch of an ETF, which isn't going to trade Bitcoin, but it's going to trade things like Coinbase and other things around.
It's a futures contract.
Yeah, so it's up 4%. There's a lot of jazz, a bit of hype around this, which is probably helping the price of Bitcoin. I think Bitcoin is probably here to stay, Pete. I do think it's going to be a store of value, not a currency.
It's like gold, isn't
it? Gold, and the next step down, I think, is when I get in, Pete. So not quite caught in the ETF hype. I think that's all different. The valuation of things around the cryptocurrency industry, that's a bit trickier. But I do think that one or two of the cryptos will survive as stores of value, and they're not going down. Pete, look at the chart, look at the behaviour. It hasn't gone down, right? It doesn't matter what you can say.
Yeah.
And I think it's volatile, but we'll get a bit of a pullback. But that's when I'm looking to potentially buy.
I don't think we'll see a big Bitcoin sell-off until we have a substantial stock market sell-off, Paul, and that's probably going to be the time. Interesting thing about Bitcoin and gold is pretty well the same, that it's become something that people just want. It's like great artwork. They want it, and therefore the price will stay high. And I interviewed the godfather of Bitcoin earlier this year for our podcast, and he tipped $100,000 Bitcoin by December. It's interesting, Paul. We won't get there, but it's on the way up, isn't it?
Yeah, it's interesting. And on the store of value, Pete, one of the things that's driving all this is just that the US government keeps on printing debt, right? Printing money. The budget deficit in the US just keeps on ballooning. Joe Biden's not going to need to wind that back. And, other stores of value like Bitcoin, like gold, they're sort of in demand because people can see what's happening with the US.
Normal money.
US money was it is the sort of de facto central currency, but the supply keeps on growing. So it's when you're getting limited things which have a scarcity value like Bitcoin, I think that's why it's got its own sort of attraction. So
I must admit, I'm still scared about Bitcoin, but maybe if I see it at 30,000 or 40,000, I'd come in, but we might not see that again. I'm Peter Switzer.
I'm Paul Rickard,
and we're mad about money.